I'm Robin Amlot. I'm the managing editor of IBS Intelligence, and for my sins, and also for yours, I am moderating the next session as well. So, can I invite to join me on stage, please, Shekhar Bhandari, President, Global Transaction Banking of Kotak Mahindra Bank. Now, before I sit down, you will have noticed this is not a fireside chat as such. It's not a duologue. It's a trialogue. So we're also being joined by Suhail Samir, the Chief Executive Officer of Barrett Pay, but not in person. So I trust through the wonders of modern technology that we will be able to see Suhail. There he is, and there are we.
Thank you very much for having me. This is a first, so.
Isn't Zoom a wonderful thing? All right, let's make a start. And I want to start actually while we've got the connection, because I can still hear you. Start with you, Suhail. The P2M sector, person to merchant. Did you find a market or create a market?
I think it's a good question. I think, to be honest, we believe the market always existed. I think when we started BharatPe, our big realization was that actually the peer-to-peer transaction is no different than a peer-to-merchant transaction. It was just classified differently because everyone who was doing UPI was by and large a consumer company. And a consumer company in its sort of attempt to make money was figuring out that merchants possibly, because they are used to a merchant discount rate on cards, on everything else, are probably the right folks to pay you for it, right? So it was sort of, and that's why when we launched, UPI was already big in India. But if you looked at where peer-to-peer was, peer-to-merchant sort of paled in comparison to that, right? And our realization that it's actually the same transfer, money going from one bank account to the other, and therefore, if peer-to-peer is free, why should peer-to-merchant be charged? Was sort of what we believe changed the game, right? So when we launched P2M transactions for free, we were losing tons of money because we were still getting charged at the back end. I think as luck would have it, 6 months into our journey, everyone else, including sort of NPCI and the regulators, had the same realization as we had, that if peer-to-peer is free, why should peer-to-merchants be charged, right? So I think we got lucky that by the time that happened, we had built a bit of a reputation for being the people who brought it to market, and therefore have sort of continued to benefit from it. But it was an existing market, to be honest. We just tackled it differently and were the first ones to sort of make it free for the merchants.
Now, you are the most talked about man in fintech in India, and Barrett Pay has had a tempestuous time. Would you say you are now in calmer waters?
Yeah, so I think, to be honest, if you think about Bharat Pay, and sorry, the answer may not play to the gallery, but Bharat Pay has continued to do well through this turpitude. Business continues to grow 10% month on month. March is probably going to be all-time highest on all metrics we've ever seen by easily 15 to 20% from the past. So there is nothing really which impacted the business. And that's sort of, in a way, a beauty of a tech-led business and not a people-led business, right? So the business continues to chug along. After a couple of months of sort of media noise, things die down and you continue sort of building, right? So that's sort of the stage we are in. Obviously, it was traumatic for the people involved. It was a bit unsettling for the team. But past is past. The business looks great, and from here to back to building mode.
Good to hear. Let me turn now to Shekhar Bhandari of Kotak Mahindra. You've been responsible for developing digital banking for corporates, for SMEs and MSMEs. Now, let's be honest, traditionally banks are pretty reluctant to get into the latter two sectors. So why is that, and why weren't you?
So I think good point. We generally consider individual first and corporates later in the mindsets. That's what the banking has been, and that's how the digital journeys with most of the banks also moved. I'll answer, I think, where are we, but first, overall as a banking, individuals demands, individuals choices, and individual solutions. There was less demand, less request from SMEs, corporates, and you realize that I think the products were also following accordingly. Also remember that there are rails which are required for making digital happen. So if the regulations were permitting you individual Aadhaar authentication and VKYC only for individuals and not possible for the corporate part, you will find the journey is taking a bit longer to do it. At Kotak, we have been at the forefront. I don't know whether, I think you know it or not, we can open an account in 3 minutes, and we launched it around 3 years, I think around 5 years back, and I think it became popular 3 years back. 811, our flagship product, which is more named after 8th of November, when the demon was announced by the Prime Minister. We have been able to open the digital bank accounts for individuals, sole proprietorships, and I think able to take it forward. And as the VKYC regulations became more conducive, you offered it to all the SMEs and the corporates as well. Not that I had planned, but I think when you see it today, there is the best portal, I think, which gets launched for SMEs, which has never been there, for corporates, for MNCs, where you are able to do everything end-to-end digitally. So which means the core layer, the middle layer, and the front-end layer, you have something called FIN, F-I-N, which gets launched to actually have the best journeys ever possible, which is, I call, on par with what the individuals experience.
So it's about the implementation of technology and using that implementation to take cost out of the equation, to make it feasibly profitable for the institution to do what it's doing. That brings me back to Barrett Pay, if I may, Suhail. You're a payments giant, but you don't make money out of payments. How does Barrett Pay make its business pay?
No, I think every business has a cost of acquisition. You have to figure out where your cost of acquisition lies, right? So for me, payments will always remain the cost of acquisition. We've been sort of the biggest proponents of zero MDR across all payment modes, including cards, to the lot of noise we face from our friends and competitors. But if my business model is based on the premise that payments can't make money long term, then I have no other option but to treat it as cap or not be in business, right? So I think the core tenet of sort of where we make money is to provide a series of financial services on top of payment flows to our merchant, right? So whether it is facilitating loans to our NBFC partners, whether it is sort of facilitating investment with our banking partners or P2P NBFCs, whether it is cross-selling insurance through sort of our insurance partners, and a series of other products like POS machines and speakers and everything else, right? So and sort of it then also becomes a link to our consumer business, which is sort of buy now, pay later play in the form of brand called Postpay. And we can sort of close the loop on consumer sort of being able to transact at a merchant and potentially on QR code over a period of time. So that's sort of the thinking. I think we think of ourselves as a provider of all financial services to a shopkeeper, not very dissimilar to what a Paytm or a PhonePe would think about when they think about from a consumer point of view, right? So we do the same, but we do it on the merchant side, and all other products, whether it's loan facilitation, investment products, insurance, uh, or for example, the POS machines, they are reasonably high gross margin businesses, right? So payment to me is sort of an entry into the merchant, my ability to underwrite a merchant for a loan, and sort of is therefore a cost of sort of acquisition. I think whether the business will be successful long term or not will depend on how many of these acquired merchants I am able to cross sell one, two, three, or four products.
Okay, let's turn back to Kotak Mahindra now, to Shekhar Bhandari. Banking as a service is a hot topic right at the moment, but is it going to actually be superseded or even surpassed perhaps by a fragmentation that sees us talking about payments as a service?
So I use the three words over here. I call BaaS, which is banking as a service, PaaS, which is payment as a service, and third one is a platform as a service. Yeah, and banking as a service is the one which most of the new age banks wants to move in, where also they want to embed the payment as a service as a subset of banking as a service, and they want to move into the platform as a service. What does it mean and how does it differentiate? And given the India infrastructure, I think it is facilitated as well. If you have UPI as a rail, I think, which Suhail explained, with 65% of the transactions in India happening on UPI, 19% in value, but when you have that particular volume happening, it is important to realize that you can have a customer, any customer, not necessarily your bank customer, to come to a platform, do their work, what they want, and still execute either a transaction or an investment or a purchase or an information or a credit score, I think, which they may want to. They want to do, I think, besides that, they want to book a cab, they want to have some food. I think everything should be facilitated is what is either banking as a service or a platform as a service. I foresee platform as a service being more popular because customers and the customer experience is the one which is going to lead to the choices by the customer. And if I were to see, I think, a product which is launched as a pay your contact, so I think you don't want to use any of your networks which are currently, or an IFSC code, or a UPI. I think just simple phone number, which is the most important thing in your mobile, you can just pay the person purely based on the number, I think are the ways I think you move forward. So I foresee platform as a service becoming the norm, and the journey towards that is payment as a service, banking as a service, and platform as a service.
So that's not the next big thing, but it's the next big thing. Speaking of something that was the next big thing, Barrett Pay, you must have seen, Suhail, growth as a result of the pandemic. The pandemic affected all digital adoption. How has that momentum continued for Barrett Pay?
That's true. Like, unfortunate, but I think pandemic, as it happened, was sort of a big boom for digital payment. It's I think sort of sad saying that, given what transpired, but from a and it's very easy to sort of see how, right? So a lot of there was a very tiny subset of India which was sort of using digital payments, right? So like, take anyone's home as an example. I don't think my parents had ever used any mode of digital payment in their life. Cash was the default. Maybe my dad used a bit of credit card, even though sort of he spent all his life with SBI and was a lifetime banker, and still sort of was more comfortable using cash himself. I think pandemic changes that completely, right? Lot more people started paying digitally, and therefore for us, because we are the recipient end of the transaction, a lot more consumers started demanding UPI and digital payment modes at store, and that's sort of what led to our growth. I think, to me, the trend obviously will continue. We've seen it sort of like if I go back 2 years back, we used to believe that digital payments are only relevant in the top 30 cities of the country. Today, I see much of my growth coming from after wave 3, from tier 3 and beyond, right? Uh, so you're sort of seeing UPI go deeper and deeper in the country. A lot of people on the consumer side on UPI as they are coming in, like for example, WhatsApp Pay. We still have only 100 million people in India using UPI. You have 400 million people using WhatsApp, right? So what that can do through the adoption of digital payments and UPI payments, sort of only time will tell, but sort of seems a very telling moment, right? So I think I do believe sort of UPI will continue to grow at sort of an enormous rate, at least for the next few years. I do believe sort of one leg which is still not covered by payment is we have one side credit in the form of credit cards, etc., and some of the people like us doing buy now, pay later. You have UPI, which is taking debit by storm. Like at some stage, I do believe these two will sort of merge, right? And credit on UPI. And again, RBI is still thinking through on how to make it work. They're working with sort of bunch of payment guys as well as a bunch of banks to really enable it. But I think that will sort of drive the next level of growth, right? Because a lot more people are still comfortable using credit. Why pay it today if we can pay it 1 month later? And sort of as UPI enables that, that will probably see the next big growth on digital payments, right? So, and the last part, sort of, I am very bullish on, and maybe our other guests will have sort of have a better sense because I'm still seeing it from the outside. But I'm generally sort of very bullish on credit card payments and POS payments still continuing to grow, as especially if we can get the tap on phone and tap on pay to sort of really take root, right? There is still a bit of trust issue of me basically taking out my credit card and tapping on your phone. Part of it will sort of go with time, but I think that's sort of what will really unlock because POS machine is still cumbersome. It still needs to be delivered. It still needs to be serviced. If we can sort of really make tap on mobile phone work, I think that may take away again a large part of the cash economy into digital payments.
I think the problem with payments is that nobody thinks about payments. What I mean by that is the payment is not the end result. The payment is the process, whether you're a consumer or a business. If you want to pay for something, it's the something you want, it's not the payment. So there's one particular company that's had 20 years of making this very simple for people, as simple as possible, and that's Amazon. And I'm going to use a word that I'm sure you should all be familiar with now, and that's the Amazonification. The Amazonification of payments, both B2C and B2B payments. This is what we're talking about. Payments need to be simple, they need to be quick, they need to be real time, and they need me not to have to think about the process. I just want to click a button and have done. Is that unreasonable, Shekhar?
No, very fair, because that's what India has done. If you were to see simple and fast, I call my personal mantras, but I think that has been executed across, especially on the payment side. UPI is a one-click journey, two-click journey. Payments through your mobile apps, payments through your bill pays, BBPS, through your fast track. I think they all are meant to ensure that you are able to have it contactless, secure manner, and very, very fast. The Indian journey on that part looks quite good, and I would want that, can I offer the similar thing in a very seamless manner to the corporates? And when corporates do it through the cash management part all the solutions. The big ones are able to do it, but a merchant, which is my kirana merchant, can they do it? Is where I think Suhail was explaining to make this entire journey simple and fast. I still feel there are many partners in the entire journey to do the final payments. And when the hops are many, which is 2, 3, 4, 5, it can be issuing bank, receipt bank, clearing bank, partner 1, partner 2, and the merchant. There has to be skin for each one of them to operate. So the objective of making simple and fast at zero cost, and that being the mantra, you need to ensure that the hops are minimum, and you need to have across journeys, whether it's individuals or corporates, to have those payments done. To come back to I think the account opening, which I was saying, if you're able to open the account in 3 minutes and you open 16,000 of them, you realize that I think that is a real solution. If you open only a couple of them and 16,000 of them every day, is what I think when you do, you say, I think it's a simple, a few clicks journey, and same thing is required for payments across.
Suhail, I saw you nodding along there. I assume you agree absolutely with what Shekhar was saying. What is Barrett Pay's own position?
I absolutely agree. Actually, I have nothing to add. I would have, it seems like I would have used the exact same words to describe this. I think, though I will sort of want to go back a bit and actually talk about, I structurally believe India has done great work on our payment processes, right? Not only for corporates and but obviously a lot more for individuals. And at least my personal experience, I'm actually only used to banking in India, so I didn't know it better. But I recently set up my first international bank account, and I had to transfer. It was very, sorry for a bit of a sidetrack, but it was a very simple transaction where I had to transfer some $35,000 to a company I was investing in. And I made some mistake. Instead of sort of adding him as the wire transferee, I added him as a bank transferee. And that opened up a large loop of like transaction being declined, money going out of the system, coming back. Eventually, with full follow-up, it took me 11 days to transfer my money to the company involved, right? And like I have always grown up with sort of abusing the Indian banking system of how slow we are. And that actually changed my outlook completely on sort of, and I use Kotak as sort of the bank I work with. And then sort of that makes me reflect and really appreciate what sort of the banking system in India has done, right? So as we spoke about, there is still a lot more to be done, especially on the corporate side. But I think our sort of banking stack and technology is at least way ahead of a lot of other markets I see, and these are developed markets. These are not sort of struggling markets.
You mentioned there's a lot to be done on the corporate side. Well, I have a corporate and an SME banker sitting next to me. Shekhar, is it inevitable that we see advances in consumer finance first before we see advances in corporate finance? Is it always going to be B2C first and then B2B as an afterthought?
So I think if you were to see the digital part, so 70s to 2000, you found that corporates were the first and the consumers were to follow. We all experienced it as an individuals as well as corporates. Why do I say that? Because if you wanted to make a bulk payments, corporates were able to facilitate, or corporates were able to do it, not necessarily individuals. Individuals used to fill up, I think, a lot of forms, go to the respective branch, and then do the payment. Corporates used to fill up one particular form, and I think all the payments, or thousands of them, were made at that point of time. 2002, 2003 onwards to 2020, I'll say that it is consumer, which came first. And when the Aadhaar part actually became the thing. So I call India got jam, which is Jandhan, which is J, A is Aadhaar, and M is mobile. And when, so there is one is English jam, there is Hindi jam, and this is I call the real jam as far as financial services is concerned. Just for you, Robert, I think Hindi jam means that you cannot go ahead. It is so it's a challenge to go ahead is jam. The English jam is the bread, butter, and jam, and the real jam, what you call as financial services, is having lot many bank accounts. So 65% of Indians having bank accounts is Jan Dhan, Aadhaar, which is all of us having an identity called as a digital identity, which can be verified, was Aadhaar, and mobile, which I think a significant amount of penetration. So when you have on an average 85% of Indians having mobile, 40% of them having smartphones, you generally find that the combination of J, A, and M actually facilitate the individual side to be done at an advanced manner. And come now, I think 21 onwards and etc., I have seen again that the SMEs, corporates, MNCs, NBFCs, and the large corporates, I think again gaining prominence to be on the digital side. Thanks to pandemic as well, as it was explained that all these things got expedited. Something which they were very reluctant, they want to do it, I think, everything online. A lot many taboos in our mind and customers' mind got addressed thanks to pandemic.
Well, we've had the building blocks of where we are now. I'm now going to introduce a word into the equation that strikes fear, confusion, or totally blank looks, and sometimes a combination of all three, and that's blockchain. This is a question to both of you, but I'll start with you, Suhail, if I may. How do you see the role of blockchain in payments? What's it going to do for Barrett Pay, if anything?
Yeah, very exciting space. To be honest, I think there's a crypto noise takes away some of the sheen of actually what the blockchain technology is supposed to enable. I am sort of a big believer in the technology itself, sort of irrespective of what my view on crypto is. And I'll sort of just give a very small example to sort of make it come to life, right? So, like if I simply think about cross-border transactions, right? The amount of sort of amount of loops you have to go through to enable a transaction, the leakage you have to sort of incur in terms of transaction costs, sort of currency conversion costs. If you sort of enable blockchain transfer of stable coins or sort of some other form of asset, it suddenly makes the experience seamless, instant, and probably with much lesser cost and friction, right? So that's just one example, right? But the wider point is sort of what the technology can do to payments is to get us closer to our vision of frictionless, fast, single click, and sort of cheap payments, right? Or as close to zero cost payment, and that's where sort of my excitement on the technology comes from. Obviously, a lot more work to be done and a lot of regulatory thinking to be cleared on what would be allowed, what would not be allowed. But sort of the start and the progress on the technology is very, very promising. We've been toying away with sort of enabling some of the features on our apps, but still early days on our development journey. So we'll probably see a product 6 to 12 months down the line from the Bharat Pay stable on.
Okay, I said it was a question to both. So, Shekhar, your views on blockchain in payments?
I think blockchain as a technology, I've been a very strong proponent for last 5 years. I think let us see, I think what are the important parts of payments. We address simple, we address fast. There are two things still need to be addressed, which is it has to be secured, and I think it has to be trustworthy. And I guess blockchain actually brings in those two elements very, very strongly. Currently, the trust and security is coming from the word called bank to bank transfer, and the stamp of the bank. Blockchain technology will actually bring in the additional layer of trust and security in addition to what is happening on simple and fast. And I foresee that whether it is on the domestic side or on the cross-border, it will actually propel the entire proposition. Will it be equally cost-effective enough? I still have question marks in my mind. It has to be facilitated to make it facilitative over there. But if I were to look at the other areas, especially in trade finance, securities, settlements, I've seen, I think, blockchain actually gaining strides over there. In India, 18 banks have come together to form a company called Blockchain Infrastructure Company. Each of the banks have contributed 50 million rupees as a capital and working on to ensure that the entire trade finance, which is domestic in nature, which has, I think, so just to give you a magnitude, when you do a trade transaction, 180 documents are required by various entities. And over a period of, on an average, 14 to 20 days. Can you reduce 180 pages to 11 pages? And can you do it instead of 14 to 18 days to probably 2.5 days, and then to 4 hours, is where the entire process moves. And just think of all these things resulting into the working capital management, which becomes more efficient, cost of funding, and the real part coming in. In trade finance, the cost parts gets addressed because there are real challenges, real pains over there. But blockchain as a technology, I have been a strong proponent, and now I feel that probably 22 to 25 will see the real solutions coming. And I also foresee the way in payments India has been at the forefront, probably in blockchain, trade finance, you can see, I think, another, I think, solution coming from India.
Okay. Well, you talked there about the coming together of banking institutions on a specific issue, admittedly. But let's explore what's going on in the payments industry. And this, again, is a question to both of you. Where's the power? What are the power dynamics in payments? Suhail, if we could start with you again.
Sorry, I missed part of the question. You said, what are the power dynamics in payments?
Yes. Who's driving things? Is it a government thing? Is it consumer expectation? Is it regulation? Is it international regulation?
So I think, obviously, to be honest, the real answer is all of this, right? So consumer expectations in India, we are very consumer service-oriented country. Consumer expectations in India are always sort of ahead of the curve, right? So there is no shying away from it, and there are enough companies trying to solve this and sort of cater to the same consumers. So that sort of drives, it's not necessarily a bad thing, that drives a lot of innovation, right? So I think it's probably consumer expectations first, but I do want to sort of give credit to the government and the regulators and NPCI and RBI. I think whatever I have seen so far, and the banking folks probably see them a lot more, is I believe sort of they are very, very innovation pro, right? So like at least my articulation on this is they let sort of innovations happen, they let experiments happen. When those experiments become large enough to be called systemic, that's when sort of they start regulating, right? So over-regulation tends to sort of sometimes kill innovation, right? And I think sort of RBI and NPCI and the other regulators, at least in the financial services space, have done a good job of sort of balancing the two. But like with everything in India, I think it's sort of consumer first. At least that's sort of my view.
I'd ask the same question of you, Shekhar.
From my point of view, I'll say that data, technology, and regulations become the three critical parts of the future of payments. Everybody has data, but are you able to understand the data, massage the data, and provide a solution to the customer? So yes, consumer is important, but I think the future consumer requires a lot many things out of the payment data. Tech, I assume that since all the devices will be able to speak to each other and then able to come out with a solution in the future world, you will find that yes, there has to be the security and the trust aspect which has to be taken care of. I call that, so data will come in, you will be able to do everything with data, but the data security along with the way I think you can work on them. And regulatory framework with respect to each one of those, that what you will do on terms of taking the data, sharing the data, security, and the future regulations with respect to even creating the rails. Please do remember that the rails in India are owned by public or rather than, I think, privately owned. I think they are in good hands, but it is important they need to be equally secured and they need to be future looking. I would ideally like to have watch all these three parts. And I always take examples, which is, I think, the future of either the payments come in. I have a servant at my place, I think, who probably may be earning around 25,000 rupees a month by working in 2 or 3 houses. Will not get credit from any of the institutions. It won't get it from a bank, it won't get it from a fintech, it won't be able to get it from anywhere. Why? Because I think his data will be generally less available. Can he be lent, I guess, 100,000 rupees? My answer is yes. Who lends it to him currently? I guess he takes it from a private lender at a rate which is 4 times what the bank lends. This is what the present part is. Is it an exception? No, because I think I go and move into my vegetable vendor. And yes, you take a few things from the web, from the new age companies, but I think you see what is happening on the economy as well. And they all use QR as a mechanism to accept the payments, but not having an access to get the credit. I think the fruit vendor must be doing, in my mind, a business of, again, in Indian rupees, around 15 to 20,000 rupees a day, and then I think not able to get enough credit. He also will be borrowing at 3 to 4 times of what the bank rate is, or twice of what the fintechs lend. And 1, 2, 3, 4, 5 cases, each one of them I see that as an opportunity. So there is a payment which is happening. It is getting captured in some manner or not getting captured, but it is not getting massaged enough to have a good score for the individual who is actually doing it to really make a solution. So the future is, in my mind, data, the way the devices talk to each other, called tech, and the regulations which will probably try to have all of them being in a good, secured, and used in a proper manner.
Well, I think you probably covered part of the answer to the next question I'm going to ask in what you've just said, but I'm going to ask it anyway, because it's the last question from me before we let the audience have a go at you both. So, Shekhar, starting with you, what would be your key prediction about the shape of the payments landscape over the next 3 to 5 years?
I think it has grown very well in last 4 years. It will only multiply from here. If we think we have reached a peak and from here on we will pause. So I foresee payments industry to grow on an average at, I think, 25 to 35% per annum for next 4 years from here. And you will have enough number of customers, enough number of opportunities, and payments actually to become a lead for doing all the other financial products. There are a few firms which have started working on it, including traditional banks and the fintechs. But data is the new oil. I think you will be able to see the same part. I think data being an important part and regulations being an important part to make the future of payments and finance.
Same question to you, Suhail. Apart from Barrett Pay taking over the world, what is your key prediction for the next 3 to 5 years?
No, I actually agree with Shekhar, right? So I think, like, if I have to sort of literally guess 5 years out, I will easily expect sort of payment flows and digital payment flows to be 4-5x of what they are today, right? Which probably roughly translates to the same 25-30% growth which Shekhar sort of talked about. Like, I think India is generally an innovative country, so I will not be surprised with sort of 1 or 2 new payment modes sort of emerging, which will sort of become meaningful in terms of sort of their contribution to economy. Whether it's like, my bet is on tap on pay, tap on phone, but let's see where that goes. But sort of, and I do believe sort of while all this innovation is happening, UPI and the credit rails or the card rails keep on becoming stronger, and will sort of keep on growing irrespective, right? And I think my sort of other prediction is that payments will keep on going cheaper and cheaper. It's been seen across the world. It is sort of being played out in India with UPI and now RuPay. I will not be surprised the day where actually we pay consumers for payments and figure out how to recover that money from elsewhere, right? So again, maybe it's too forward-looking, but overall, I believe sort of payments will tend towards zero cost, and sort of banks, fintechs, everyone will sort of keep on innovating to find new profit pools on the back of that data of payments which we will sort of process.
Thank you very much. Now, before we round up, I'm going to put my spectacles on so I can see the audience. I don't know if that was a good idea or not, probably not. Questions from the audience. This is your chance, ladies and gentlemen, to grill one or both of these fine gentlemen on stage and on screen with me. Anybody have a question? Have we beaten you all into submission? There's a gentleman there.
I have one question for both of you. So I think the most important thing that you're saying that data is going to be crucial, and the reason why data is going to be crucial is you can select the right individuals to lend to, right? Now, but with competition and when everyone is doing the same thing, do you fear that you could start or you could be looking at a subprime crisis somewhere down the line?
Who wants to take that first? Suhail, do you want to go first on that?
Why not? And I'm giving my Shekhar view on this will be different. I don't actually foresee that. I think everyone is sort of going to go after more and more data because I think that's what is required to underwrite consumers for lending. And of course, I don't think either me or Shekhar meant only from a lending point of view. It has sort of 20 other use cases, but let me take the lending example. Whatever said and done, 75% of India still does not have access to credit. Whatever said and done, only 4% of India's population has credit cards, or 4.5 now. Like if anyone were to try and guess the SME space lending credit gap, like credit needed, not received, I think the World Bank pegged it at 500 billion 2 years back, right? So there is obviously risk of underwriting on the back of incomplete data and probably leading to some delinquencies. But I think all the people playing in this market, like whether it's banks like Kotak or someone like us, I think are smart enough to learn from our models and sort of improve it over a period of time, right? So I think as you try to build something new, it is inevitable that that some money will be invested, whether it's on a customer acquisition or taking loan losses as sort of the cost of learning. But I think structurally, what we have as India covered, at least on the credit side, is just top of the funnel right now, right? So huge market to grow, and that's why so many of these banks sort of coexist, and that's why there is room for so many large NBFCs like Bajaj Finance, and that's why there is room for some of us fintechs to sort of play in the same market, right? So it's a massively credit-starved market. I think right now, as a country, we should be worried about credit inclusion versus worrying about over-credit leverage.
And Shekhar.
So I think I'll only explain that subprime happens when the actual amount of loan which is given is much, much higher than the intrinsic value of the security. So example, when you are able to have a house which is valued at $1 million and you are able to lend with various structures, 4 million through various structures, I think that's when subprime happens. So this is the case where the data is uniform across. I don't know whether you know it or not. There is this framework called account aggregator which has come in and formulated in India, where an individual consents to give its entire data and where all the lenders, since we are talking of lending, I think are able to see the same data. And please do remember, as a part of the entire infrastructure, anyone who is being lent is being reported by all the respective institutions across that how much has been lent and how much has been, and what is outstanding at end of every month. So to specific point of subprime, I don't foresee that happening with the current infrastructure and the proposition which is there. If you prepare structures based on the actual lending, you can have, key example, the pool is for 1,000 crores, which has been done, and it is sold at 1,500 crores based on asset prices which has gone up, and then that 1,500 crores is again, I think, marketed something more at 2,500 crores. That's when the subprime happens. In this case, we are talking of 1,000 crores and intrinsic value of 1,000 crores.
And if you know of an institution that isn't following the sensible advice you've just been putting forward, I've got a bridge in Brooklyn that I could get them to refinance. Any more from the audience? Come on, boys and girls, wake up. Any more? In which case, we will wind things up, and let me say thank you to Suhail Samir from Barrett Pay, who's... Oh, you went, now you've come back.
Oh, I'm here.
Thank you very much indeed for your time, Suhail. Thank you for joining us. And let me also say thank you to Shekhar Bhandari of Kotak Mahindra Bank. And if you would show your appreciation in the usual way, I'm sure they would both be gratified. And I know that was for them, not for me. Thank you very much.